here from FINRA, this is Darkpool data. Off exchange trade, this is Darkpool data. Now look at SPY. We had 50 million shares of SPY traded in the last reporting window. But what I wanted to show you here is the following. Let's go to the full spreadsheet. This is all of the data for SPY, for Darkpool data for SPY, all the way back to 2019, which is exactly what I wanted. So I'm going to erase all this data, and we're going to look at the levels, okay? Let's just go to the total amount here in the chart. So I want you to remember the macroeconomic things that occurred between 2019 and 2022. We had the rates low. We had short interest skyrocket. We had the rates go up. We had the repo go up. And we had the market essentially go down after that 2020 bull run or SLR. So 323 2020, 316 2020, 39 2020, 224 2020 are the four outlier dates we have for total amount of shares that were basically traded on the dark pool. Now, if we go look at those dates on the fucking chart, we have 224. Let's go to the daily. Better representation. Go back. Moving lines everywhere. God damn it. I hate when that happens. I need to lock this shit. Let's zoom out. Okay, so what dates? 224. So right here, that's number 1. Three 9 right here. So I'm going to go ahead and mark these on my already autistic chart. So we have, I'm going to draw. I'm going to do a polynomial line. Where the fuck is that at? Here it is. Poly line. So we have 24th, then the 9th. So 24th here. Then we have the 9th here. And what else? 16th. Here. Then we have the 23rd. And then if I just go back here. No, you fuck. Stop it. So this is the little box of time. Now I'm going to put this in here. Darkpool skyrockets. Hold on. Edit the text, dog. What the fuck, Weeble? What? Okay, I'll just leave it there. Darkpool skyrockets at the fucking bottom of that run, or that COVID dip, and that's when the activity in the Darkpool market goes up, and then essentially it basically remains flat by then, or after that, and then we see another spike, a noticeable spike on 3/13/2023. Let's go look at 3/13/2023. Right here, right there, bottom of that little downtrend that started on the 1st of February. So right here, so 3/13. Essentially, the market hasn't gotten to this point since then, as far as a price perspective. So that was clearly the buy-in right there. That's when they all bought in, using the dark pool. And remember, we saw Fidelity, BlackRock, and Fidelity, BlackRock, and Vanguard buy up basically the entire fucking market during this time. But yeah, interesting shit there. Let's go back and look at the charts again. DLTA accounts for the majority of total notional sum. So if we go and we do a little bit of investigation on what DLTA is, we can see here it's the dealer web wholesale market. Now, this is the largest dark pool that's in use right now. If we go back to FINRA's website and we look at the report here, the number one by far, I mean, we're talking like more than 10 times the amount of the number two, which is UBS. We have DLTA Dealer Web for 30 million shares of SPY with only 123 trades. So that's a lot of fucking shares for a very little amount of shares. I'm sorry, very little trades for so much shares. So out of the total 51 million shares that were traded, the dealer web took up 30 million of those, but only 123 trades. So if we do a little bit more investigation, this is a wholesale market. Securities pricing, that would be good to look at. Benchmark closing prices. TraderWeb and FTSE Russell have partnered. Okay, that's useful information. To create benchmark closing prices in a manner consistent with IOSCO principles. The fuck is IOSCO? See, this shit is never-ending rabbit hole. IOSCO stock market. Okay, this is the rabbit hole we're going down now. Okay, IOSCO is the international body that brings together the world's securities regulators. So it's an organized crime ring and is recognized as the global standard setter for financial market regulation. I thought, okay, what? Our objectives and principles of securities regulation are endorsed by both the G20. Okay, again, what the fuck is that? More shit. G20, stock market. Oh my god, this rabbit hole just keeps getting fucking deeper, dude. So hold on, I need to write all this down. So I'm gonna have to go back and research this later. Okay, area of interest, website description. So we have the dealer web Darkpool as number one. We have the G20, which is this here. Then we have the dealer web, who we are. Our purpose. Okay, let's look at the leaders. Billy Holt, Chief CEO of TradeWeb Markets. Oh, look, Michael H. Cohen, Managing Director, Global Head of Marketing Communications. Interesting. Douglas Friedman, General Counsel. Here, this is what's important. The Board of Directors. So let's get some background history on Jacques Mitites Egrain. Let's look at his LinkedIn. TradeWeb. Fucking all Inloggen. Inloggen. Oh, it's in German, lad. I don't know what it means, mate. Let's go. Let's just get some general information on this motherfucker. It's got to be banking related. Let's just put banking here. All stems from banking. brings nearly 30 years of expertise and leadership experience in the financial services industry, including, okay, here we go, including 9 years at Swiss Re, including as CEO, and 20 years in global leadership roles at JP Morgan Chase in New York, London, and Paris. So, okay, we got one JP Morgan Chase here. I'm going to go and make another column here. Leaders. Leader bank relation. So it's Jacques Matites. And we have JP Morgan Chase. Wow, he's also the he's also a non-executive director of the London Stock Exchange and leading media communications company WPP PLC. So you got media, you got stocks, you got banks. What I mean, that's everything. Everything we're used to. So JP Morgan Chase. Other relations. He is, what was it again? Non-executive director of the London Stock Exchange Group, LSEG Ltd. Dope. Okay, we still need a description of the dealer web. It's just, it's just a dark pool. Largest dark pool for spies. We're gonna put. I'm not gonna delete this website column. We don't need that. Okay, so that's one of them. Now let's go back to dealer web. Let's look at Balbir Bakashi, Chief Risk Officer. And this dude is also part of the London Stock Exchange Group PLC. Whoops, wrong column there. We have Balbir Bakashi. Okay. Then we have Stephen Burns, former Chief Operating Officer and Chief Financial Officer. Okay. Okay, I guess he's both. Okay, this bitch is from Goldman Sachs. So this lady is also from the London Stock Exchange Group PLC. Paula B. Oh my God, Madoff. Madoff, huh? Huh, that's a familiar name. Let's go ahead and put her name in there. That's probably important. So we have Paula B. Madoff, who was, well, she's an advisor at the Goldman Sachs Group. Okay. I'm going to put that here. Advisor for the Goldman Sachs Group. She got canned, I guess. So it's clearly this board is controlled by the London Stock Exchange Group PLC, which is made up of banking executives like Jacques Aigrain, which is the chairman of the board, and he is from JP Morgan Chase. So that's probably good on this. And then we'd have Thomas Pluta and Billy Holt. We need to investigate Billy Holt. So let's look at Billy Holt. Okay, so he served as the company's president since 2008, been the CEO, became the CEO in 2023. Yep, he announced TBA mortgage trading. But where's his? I want his fucking bank. I want his fucking history though. What's the PDF say? Just the same shit. Same shit. I want to find out your work history, buddy. Billy Holt. What banking did you come from, buddy? I know you came from some bank somewhere. In login. Fuck LinkedIn, man. It didn't used to do that shit. I don't want to fucking log in, mate. Billy Holt. Why is it not like fuck off, Google? This is why you suck dick. Okay, let's do this. How about let's test out Mr. GPT over you go. I fucking hate Google. It's so shitty. It's gonna do the same thing. Societe Generale. I fucking knew it. It's always a bank. Always a bank, buddy. So Societe Generale. Okay, Billy Holt. Billy Holt. So we got J.P. Morgan Chase. We got Goldman Sachs Group. I put that in the wrong column. Goldman Sachs, London Stock Exchange Group, Societe Generale. And then we have this bitch. Did I not put her fucking name? Okay, I did. Paula B. Madoff, Billy Holt. Okay, and then that's probably it for that. I don't need this up. So now we're gonna do. That's good there. Well, hold on. There's one person of interest that we missed, which was Thomas Pluta. Pluta joined TradeWeb from J.P. Morgan, where he was global head of linear rates trading and co-head of North American rates trading. 27 fucking years with J.P. Morgan. Okay, so we have Thomas Pluta. Thomas Pluta. Thomas Pluta. Thomas Pluta. He was. Whoops, wrong column again. J.P. Morgan. Thomas Pluta. So all banking related, as you would expect. So that's the dealer web, trade web, whatever you want to call it. Same thing. And these are the lists as of, what was this? February 20th, 2022. There are 31 alternative trading systems in the US as of the date of this posting. And the dark pool that we just looked at was DLTA Dealer Web, which goes right back to where we just were. So now let's go and look at Citibank. Damn, there's so much of this shite. We're going to go look at the G2O now. G2O. G2O in the stock market. From the OECD, of course. The G2O attaches great importance to the role of the financial sector in ensuring sustainable economic development and the stability of financial markets. The OECD supports this ambition by contributing to the G2O discussion on capital flows, including by promoting further the relevance of the OECD Code of Liberalization of Capital Movements for all G20 members in the G20 International Financial Architecture Working Group. Furthermore, the OECD has supported the G20 emphasis on promoting small and medium-sized enterprise development, including access to finance, participation in GVCs, corporate governance, and taxation rules. The G20 adopted the G20/OECD high-level principles on SME financing and G20/OECD principles of corporate governance. In 2020, with the COVID-19 crisis hitting developing countries with particular force, the G20 launched the Debt Service Suspension Initiative, extended to 2021. Of course, through SLR as well. That's when all that took place. The G20 expressed readiness to go beyond suspension by affording debt treatment for DSSI eligible countries. Essentially, it was to advance debt transparency and sustainability. They are moving towards hosting the data repository of the Institute of the International Finance, IIF's Voluntary Principles of Debt Transparency. God, there's so many fucking moving parts. This was adopted in 1961. There are 37 OECD countries and an increasing number of G20 members since 2012. That is when the last debt ceiling was raised by Jerome Powell. And then they revised it to obviously conform to COVID in 2019. So yeah, a lot of moving parts here. But if you don't know what the OECD is, they play a leading role in the developing guidelines for policymakers on financial consumer protection and financial education, which are critical in supporting meaningful, safe financial inclusion that contributes to inclusive growth. Blah 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 blah. Crime. So yeah, that's the G20, supported by the OECD, which is a big, big, big global group that's been involved in a lot of macroeconomic policies over the years. We have summits here. When's the next summit? I don't see the next summit. Anyways, let's go back here though. What were we looking at here? I have so many fucking tabs open, man. Too many tabs. It was the G20 and something else, but I forgot where we were looking at that from. Right here, FSB. That's probably something I should know, but I just can't think of it off the top of my head. No. FSB G20. What does FSB mean, man? FSB, dog. What does it mean? Oh, this was in October 2023, of course. Tell me what it is. Oh, okay, duh. I should have known that. Financial Stability Board. Okay. Financial Stability Board. I want to know who the fuck is on this shit. Members of the SFB. Here we go. All right, we got Klaus Knott. Jeez, that's a fucking name. Look, president of a bank. He's the chair. He looks like just an evil motherfucker. So, okay, let's look into this guy. Klaus Knott has been president of Die Niederländische Bank, I can't read, since the 1st of July 2011, and served as chair of the Financial Stability Board since December 2nd of 2021. He is also a member of the Governing Council and the General Council of the European Central Bank, member of the European Systemic Risk Board, member of the International Monetary Fund's Board of Governors, and a member of the Board of Directors of the Bank for International Settlements. Damn. He has several secondary positions. Since 2005, he has been professor of economics of central banking at the University of Jesus. And since 2015, he has also been honorary professor of monetary stability at the Economics and Business Department of the University of Amsterdam. Interesting. Where did he come from, though? From 1995, he worked for DNB for almost 12 years for various positions, including senior economist in the Monetary and Economics Policy Department. Oh, there it is. International Monetary Fund from 1998 to 1999, right before the Big Bang allowed bank mergers to happen again. 1991, he graduated with honors in economics from the University of I can't read. In 1995, he obtained his PhD in economics. Latest activity from him came out of May of this year. It's a speech. Okay, so it's, to me, this is him speaking. Therefore, to me, a successful macroprudential approach depends on the completion and proper implementation of the international regulations the SFB has been developing. Okay, In the remainder of this speech, I will discuss in more detail the SFB's recent work in the area of investment funds. Okay. Okay. So to address vulnerabilities, which is going to be, hold on, the NBFI sector. What the fuck is that? What are all these new terms coming up? NFBI sector. What the fuck is this? Non-banking. Okay, there's just a bunch of acronyms. Non-banking financial company. Okay, makes sense. So the non-banking financial company sector has grown substantially since 2008 to almost half of global financial assets. It has also become more diverse. As a result, NBFI is increasingly important for the financing of the real economy. More diverse financing channels are beneficial to the real economy. But the flip side is that vulnerabilities within the NBFI sector can increasingly threaten financial stability. To address the vulnerabilities, the SFB has been looking at imbalances between liquidity demand and supply. Interesting. Let me highlight a few important factors. First of all, liquidity mismatches reduce the ability of certain non-bank entities to handle shifts in liquidity demand. Consider an investment fund that offers its investor the possibility of daily redemptions with no notice period. If the fund has invested for a large part in illiquid or less liquid assets, it may struggle to sell assets to meet redemptions, especially in challenging market conditions. In turn, redemptions may increase if investors are worried that the fund cannot facilitate them. On the liquidity supply side, we are also seeing challenges. For example, bank dealers may be unable to absorb large selling pressures during times of stress, as their balance sheets have generally not kept pace with the increase in the size of debt markets. That's where the repo comes in. Having analyzed both liquidity supply and demand, the FSB is working on policies to prevent the mismatch from becoming excessive. Last year, the SFB revised its policy recommendations on addressing vulnerabilities from liquidity mismatch in open-ended funds. The FSB also published policy proposals to enhance the resilience of money market funds in 2021. That's relevant. Interesting. Man, this shit is, it's fascinating, right? IOSCO plans to revisit its 2012 policy recommendations for monetary market funds in light of the framework and policy toolkit in this report. Okay, cool. It's all COVID related. So further, the FSB is currently exploring policies to address financial stability risks from leverage in NFBI. We know that leverage has the potential to amplify losses through position liquidations or counterparty defaults. Leverage can also worsen liquidity stress, for example, via margin calls on collateralized leverage positions. We aim to enhance the monitoring of leverage in NBFI and address related vulnerabilities. Okay. What else? Anything else noteworthy here? One might say that in developing our policy measures, we should look at the tried and tested approach for banks. And indeed, as we have seen in banking, a macro-prudential approach may be useful to lean against the buildup of cyclical vulnerabilities to address concentration risk. Okay. That's what I'm saying. They're telling you right here, bro. And this is recent. This is May of 2024. They're saying right here. They're saying, lastly, we know that macroprudential policy has important cross-border implications, including in terms of reciprocity and home host considerations. These call for international cooperation. The FSB is well placed to support efforts to achieve this, working alongside key standard setters like IOSCO. So it's all coming from the non-banking financial sector. Your broker dealers that have all these shares that retail's trading, and no one can have the shares or locate the shares. All tied back to that, but it's all tied back to federal macroeconomic policy. Yeah, it's all a big ass puzzle. You just gotta put all the pieces together after you find all the pieces. Yeah, it's fascinating shit to me. That's for goddamn sure. Y'all have a good one.